All right, guys. Um, Welcome to the live. Almost done here. Go ahead and put your questions in the chat. Um, Whenever I go live, I want to be able to help you guys with your credit. So make sure you guys do that. So, okay. Just give me a moment. I'll be with you guys. So just stand by. Mm. Da 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 da. Let me see. So I got everything all set up. All right, almost done here. Okay, welcome to my. Make sure you guys can hear. Shoot. Welcome to the stream. I'm so excited to go live. I feel like I haven't gone live in a very long time. so so definitely welcome everyone to the live where I can go ahead and answer your questions when it comes to your credit. So I am excited. Uh, all right. So what are we going to be going over on the stream today? So on the stream, what we're going to be going over is the habits of pretty much how to get to an 850 credit score. We're going to look over credit reports. We're going to look over videos, and then we're going to cross reference the information based off what I said. And we're going to show you someone that has a bad credit report and how to get them out of that position so they can get an 800 credit score. So I am very excited. So let's go ahead and jump into it. Okay, so first thing that I want to go ahead and do is start off with the credit report. We're going to start off with the credit report, and we're going to show you a person that has a 800 credit score, and I'm going to break down how they got it. So let's hop into it. Okay, so here's this individual. As we can see, I'm gonna give you some layouts of what you're seeing here. I'm gonna try not to make it very complicated for you. Let's see. So, let me actually do this. I think it'll be better if I open it up in the web browser. I think that'll be a lot more better. Because again, the reason why I'm doing it this way is so I can mark. I want you guys to be able to um, understand this information that's in front of you. So with this, I want to be able to like label it, marker it, just so that can happen here. Come on. Let me know in the chat if you guys can hear me, if the stream is going good. If the stream is going good, then just put ones in the chat. If not, put twos, just so I can have a good understanding of where the stream is. Let's see. Close. Welcome. Anyone that is new, put your comments and your credit questions, loan questions down in the chat. All right, let me make sure, be able to zoom in. Okay, this is gonna be the best I can do. All right, so let's go ahead and get started. Okay, so this is a person that has an 800 credit score. So some things we're gonna go ahead and start off with. We have, all right, let's start with red. All right, so right here is gonna be the lender. So just little rules so you guys can get with me. This is the lender. This is the payment history within 2 years. This information is when it opened, when the loan opened. And the last time it was paid. And we'll put here their credit score. This is pretty much their credit score. And this up here is a summary, so pretty much you can go over this if you did want to look at it. But essentially, that's essentially what I want you to focus on. Everything else is irrelevant, and this is what I want you to remember. So as we go through this, okay, so let's start off with the. Let's go ahead and start off with payment history or payment history. So we know at least when it comes to getting a high credit score, your payment history plays a factor. So that's what we're going to take a look into, so to see if he meets that criteria. So let's hop into it. Okay, as we can see, remember right here, this is the payment history. As we can see, he hasn't missed any payments there. Ooh. The C's mean current. If you see a 1 or a 2, that's when it means that they've been past due. So as we can see here, he's never missed any payments here. No payments there. No payments there. Look at that. This guy's on a roll. I can see why his credit score is at an 800. Right there, another 800. Boom, 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 boom. Look at this. So as you can see, zeros mean this is for credit cards. So zeros just mean zero balance. There's never been anything. Look at this. Boom, boom, boom. Look at this. Oh, okay, so I think we pretty much get it. So, okay, so we know perfect payment history. So we know he's hit that check mark so far. Next, okay, let me pull up the. So just so you guys can have this information in front of you, also. Sorry for this. And I just the reason why is just I want this to be so perfect for you guys that I'm just a perfectionist. So I want everything to just be the just amazing, amazing, amazing. So here we go. All right. So if we take a look at here, this is Experian's credit algorithm that they've let people know of pretty much if you want to have a great credit score, not to get a perfect credit score, but just a great credit score, this is pretty much all we need. So we already established that his payment history has been flawless, no missed payments. Next, we're going to move to amount owed, which let's look at it. So we're going to do a little cheat real quick. It's going to go ahead and be right here. So this is everything that he owes: his installment loans, his mortgage, and his credit cards. So as we can see, he owes over 300 and I would say maybe close to $400,000. So he has $400,000, and how do we know that? Is we're gonna go to the open section of his loans because what's been closed is no longer matters. So let's take a look here. So amounts owed. So pretty much amount owed falls down to the balances you have remaining on the loan. That also includes your credit utilization. Are you overusing your credit cards by 30%? Amounts owed will also go based off individual loans. So just not as a whole of what you owe together, individually, do you still owe a lot of money? So let's find a couple of accounts here. So as we can see, look at this credit card right here. This credit card with American Express. It's pretty much what it is. He's had it open since 2019, and his credit limit is 6,000, and he's only used 1,173. So as we know, when it comes to the algorithm, that as long as you're under 30%, you're fine. 30% of this would be a third, so that would be $2,000. So he's really close. I would say he's around the 20%. And so yes, so he is okay in that aspect. So he's not using a lot. Beautiful. Mortgages don't play a high role because normally people are not paying down their mortgages really quickly. So the balance of the mortgages won't count as strong, but it does play a factor. We're not going to sit here and ignore that it doesn't. But for this example, we'll just skip over that. Okay, so this is another credit card, more credit cards. Okay, what else he has? So now I'm looking for an installment loan. Okay, so the only installment loan he has is just these student loans, which they are in deferment. So essentially, this isn't hurting. There's probably some back end stuff that has happened that's preventing this. Because if this would slap him fully, then his credit score would definitely drop. So because his student loans are in deferment, the system isn't counting this student loans. So it's just that loan. So that's why. So as you can see on here, so anything that says rev right here means credit card. So there's a credit card there, another one, and yeah, that's it. So those are what's open. But the thing is, he's paid off installment loans before, which is what really matters. Like here, Mercedes-Benz Finance. He had this car for 14 months. As we know, that is great. He paid it off, so it positively affected his credit. Another auto loan here. So this guy is just doing phenomenal with that. So amounts owed, he doesn't owe a lot, as we established at the top. He only owes almost $10,000. But if we look at one of his open credit cards, he has a big line of credit. Let's see, which one was it? 6,000. This one right here, this American Express. He has a $34,000 credit limit. So that's what's going to help his utilization. So his utilization is at 89%. How do we know? Because of here. This right here tells us he's at 89%. So we've established so far payment history. He's never missed a payment. Now amounts owed. Essentially with amounts owed, he has really low credit utilization. He doesn't have a lot of debt compared to what his credit limits are. He doesn't have any installment loans, but he has paid. So that all plays a factor when it comes to amounts owed. So let's go ahead and move on to the next section. Next section is going to be credit history. This is pretty simple and explanatory. So with credit history, it's just not about how long you've had credit for. It's also how long you've had other loans open for. So that plays a factor. So it's those two, and then how many accounts are you opening, so your credit age. So if you've had credit for 5 years and you're opening up a new account, it is going to drop because you added this new debt or this new loan to your credit report. So let's take a look at this individual's credit history. Okay, so this is an easy way for us to tell. Old trade, 2003. So he's had credit since 2003, 20 years. You see how that plays a factor into his 800 credit score. So 99, these numbers right here mean how many months they've had it open. It looks like it only goes up to 99 months, which ends up being over 8 years. Yes, 8 years is the max that will show. So he's had this for 8 years. He's had this for almost 2. So like the small, anything under 2 years, it's not really good to have. You want to have at least 2 years of repayment history. Look at this one, 41 months, 60 months, 60 months right here, 68 months, 91, 80, 59. You guys get the gist. You guys get the gist of it. You see how having those long-term history helps your credit, because each month you're paying, while not missing your payment, and you're just having it open for such a long time. Now let's take a look at what he has opened, which is what we established with the credit cards. So we have right now his Open American Express, 68 months, 69, 4, 8 years. This one is new. Most likely that's why his credit score decreased a little bit, because he just opened up that account 11 months ago. We have this one, 8 years, 8 years. So he is top tier when it comes to building that credit history and not just from long term but short or individual loans, like I mentioned. How long you've had those loans open does play that factor. So go ahead and put comments. Let me know. Make sure you're understanding anything you want me to touch bases on. And remember, you can always put your credit questions in the chat, and I'll answer them towards the end of the stream. So let's continue to the next portion of it. We're going to go ahead and do new credit. This accounts for 10%. So this is any new loans that have opened, and also inquiries play into this. So let's take a look here. So as we established, these are his open loans. So anything that says open is his. So this is open, 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 open. Right here, we established this was recently opened. This is opened. Whoopsie. Okay, great. And then here's the credit inquiries. So as we can see, not a lot of inquiries. He's only opened up one new account, and we can validate that at the top here in the summary. One inquiry in the last 6 months. 3 in general. Let's see, paid account. I thought it was probably at a different one where we show you, yes, it was at a different institution that I work with. It would actually show you how many accounts they opened in the last 90 days. But this one shows the 6 months of inquiry. So let's continue. So that's how we can go ahead and validate essentially his new credit. Is again, he has very minimal inquiries. We saw 3. I would say anything over 10 starts slowly being a problem, but you're still in good standings. And then making sure you're not opening up, I would say like 4 to 5 accounts in the last 90 days. It starts to affect your credit because you're opening up too much credit and you're bringing down your credit history, which is your credit age. Remember what I talked about that? So yes, so you want to minimize opening up accounts. So pretty simple and explanatory. Let's go ahead and hop into this last one. All right, it is going to be new credit. So not new credit, sorry, credit mix. So credit mix comes of having different types of loans. So loan types and different lenders. So loan types would be revolving. So what is a revolving? A credit card, store credit card, gasoline credit card, a credit card from a bank, a credit union, one from like Capital One, and other lenders. And then home equity line of credit. Yes, a home equity is not an installment. It is a line of credit. It's in the name, home equity. And then you have the lines of credits, which are just unsecured. So those 3 are revolving. And then you have installment loans, which are houses, cars, boats, motorcycles, RVs, travel trailers, campers, RVs, etc. All those are installment loans. The difference between them, it is going to be that one has a end date and the other one doesn't. And then with revolving, you can continuously use it. You make your payments, you can continue using it. But with installments, you just go paying it down each month, right? So that's credit mix. Another one is the type of credit mix. So do you only have credit cards through banks and credit unions, right? Do you have only store credit cards? Maybe a home equity is all you have. Maybe all you have is just an auto loan, only reporting on your credit. So you're not mixing it up. So your credit plays 10% of it comes from that. So let's take a look at this guy and see. So we've established AUT means an auto, which we know is an installment. RF is a mortgage. Rev is revolving, and CRC is a charge, which is also revolving. So let's take a look here. So here's one installment loan. Here's another one. Another one. UNS is unsecured. That's another installment, another installment. So all we're seeing is just installments for the time being. Okay, that's good. So right now his credit's lopsided. Okay, here's a Victoria's Secret credit card. There's that mix. Here's another credit card. Another mortgage, another credit card. So as we can see, just going down, this person just has, his credit is just mixed all the way. And even with the accounts that are open, see how he has a mortgage, an RC is a mortgage, and then he has a credit card. Boom. With those two right there is enough for you to go ahead and get that 800 credit score. You don't need all these lines. That's the thing when it comes to building to 800 credit score. You need like less than 5 accounts. Preferably if you just have 2, like a revolving and an installment loan, you'll be fine. Like, it's not that big of a deal. But with but when you start opening up accounts, you just open yourself up a higher chance of your credit decreasing, because there's all these type of temptations. Life can happen, and then if you're not able to pay down these loans, it makes it challenging to get out of debt in general. So we just went over why this person has an 800 credit score. So by that metric of the credit algorithm, this person is in an 800 credit score because he did everything right based off what I just showed you, and based off what Experian determines what a high credit score is. So this person's getting every loan under the sun. Okay, so next thing that we're going to go ahead and do is we're going to look at the person that has the bad credit. Because again, now this is more geared towards you and how you can get yourself. So if you're in this situation, lock in with me, lock in. Again, comments and put ones in the chat, and I will go ahead and answer your questions towards the end of the video. Okay, so let's take a look at this person with the bad credit. We're going to do the same thing with them. Make sure everything is visually nice. You guys are able to see. Okay, I think you guys should be able to see. Okay, so again, now establishing this right here. So right off the bat, we can tell this person already has a 599 credit score, so just under 600. We're gonna see. So we're gonna start off with payment history, which again, it's gonna be right here on the side. So remember how I talked about C's are current? 1 is 30 days, and then G is that I went to collection. So as you can see, off to a bad start, amigo. Off to a bad start. Boom. Missed payments. And I'm saying payments. And these loans went to collection, which also plays a part of your credit score. Whenever these loans go to collection, it is part of it. Why? Because it has to do with your payment history. You're paying a loan on time. So if you stop paying, and also your biggest factor is your payment history, then you effectively just killed that by just letting the loan go to collection and stop paying it altogether. It's within the word stop paying, right? So that's essentially what happens. So he has bad payment history, which counts towards the highest factor is credit. It went to collections. That also counts against him and knocks his credit score down. And that he owes money. So let's triple whammy right there. That's a triple threat in a bad way. You have missed payments, the loan went to collection, and you still owe money. That all falls within your payment history of what makes up. There's a little bit more, but that is what makes parts of your payment history of how the algorithm decides where your credit score is at. Boom. Look at that. So all of these loans went charged off and they were recent. Look at this. This year, this year, this year, another one. Yeah, this guy's on fire. If your goal was to not want to increase your credit score, this guy's on a movement. Another one this year. So he had over 5 this year. In 2020, he charged off an auto. Look at that. Boom. Another one. A collection. Payments right here. You see these ones? You out here catching L's. Missed payment history. A 6. He's been over 120 days easily past due on this loan. That's what the 6 is supposed to mean. Because a 4 is 120. So I assume at least 6 months he was past due. He paid it off. But oh, there it is. 180. That's what it is. The 6 means 1. Oh, that is half a year. Yeah? No, that's not half a year. Yeah, it's not half a year. I had to make sure. So because he missed that, let's see if it's on his open loans he's missed any payments. So he doesn't have any more missed payments. He has all these inquiries, which this goes over the 10. Easy. Boom. Okay, so right now he's doing good. It's going to take him over 3 to 4 years before this stops affecting his credit score. Like, time just has to happen. Whenever you miss a payment, a loan goes to collection, you still owe money. Like, you just gotta let time pass by. That is part of the algorithm. It's part of the credit history, and the payment history. So your amounts owed and credit mix. So it's all the credit algorithm that I showed you here before. It's all this stuff combined is what drops it right here. So now we can understand easily why his credit score is at a 600 credit score. So what does this person need to do? Realistically, he needs to pay all these debts off. All these charge-offs. At some point, I would leave this towards the end, because when you pay off a collection, it doesn't increase your credit score. Not right now. Because it's not about paying it off. It's about that it's on your credit profile. So you just have to let time pass by. So that's why I say this needs to be the end. Go towards the end. I'll see the missed payments right up here. Time is going to have to pass by. What he can do and take action now is stop applying for one. Stop applying to places. People don't want to give you money, and it makes sense. Your credit shows it. Next, it is going to be, so after stopping to apply, what he needs to do next is, come on. Don't know why this thing is lagging. There we go. Okay. The next is going to be his credit utilization. He needs to bring it down. He needs to pay down. This one is over. This one's almost at the limit. The limit is 300. He's at 263. He's at 263, so he's way over 30%. He's over 30% on this one. 8,500 is the credit limit. This one, he's just a little bit over 30%. He's like at 36%. This one, he is like in the 90s. His is a 400 limit. He's already at the limit. He doesn't have anything. And this is a unsecured loan. And how we can validate that is, again, coming up here. Right here. So total revolving available. So he has only 32%. So that means he's using 68% of his credit utilization. As we know, it is a no-go when it comes to your credit. So yes, so getting that under 30% as a whole is what I would start working towards. After that, you're going to want to attack the installment loans. Preferably, let's tackle this one. This one's going to be easier to tackle. So getting this down, if he can at least get it down to a $1,000 balance, he'll see a big difference. He doesn't necessarily need to pay it off at the time, but he needs to pay it down by at least 50%. Right now he's at 3,900. 2,500 would go ahead and be the the ideal spot that he would need to be at. And people that are new to the chat, welcome, welcome. Feel free to put your go ahead and put your credit questions in the chat, and I will go ahead and answer them here towards the end of the stream. So far, right now, what I'm doing for a recap for the people that came in, I am reviewing someone with a bad credit report and how they can get themselves to an 800. So if you want to have a great understanding of what's going on, I would start maybe 15-20 minutes before, so you can have an understanding, because I started off with someone that had a perfect credit score in the 800s, and I showed you and I showed the habits. So that's where you want to go ahead and start from. But if not, you can start here. Feel free to ask questions. I'm gonna go back to this other credit report and break down what you're seeing. So right here, okay, perfect. So this is how you're gonna be able to read. So this is what me, as a person that is a consumer loan underwriter, when I'm looking at someone's application, this is someone's credit report that I see on my end. So you're seeing what I see on a daily basis. So right here, what's in red is gonna be the lender, so who they have the loan with, when it opened, the last time it was paid, their payment history within the last 2 years. This is how long it's been open in general. Obviously, it's been open since 2003, or it was open at 2003. This is closed already. This is a mortgage. So that's how. So that's what I want you to understand. And then up here, this is the credit score. Outside of that, everything else is irrelevant. But again, if you have any questions, need me to slow down or go back, feel free to put a comment to make sure I see it. So going back to this, so essentially what I'm doing is what this person needs to get out of the hole to get themselves to an 800 credit score. So what they need to do, so I was talking about getting the credit utilization down to 30% and now paying down this unsecured loan to at least 2,500, so it can increase the credit score. Preferably 1,000 would be better, because amount owed, you owe less. You would owe like less than 20% on the loan. That's beautiful. Next, you're gonna want to work on, the person needs to work on paying this down. He needs to at least get this down to at least, 46. I would say he needs to get it down to 30,000, which I think that is 75% for him to start making even a budge to the credit report, or to the credit score, to continue increasing. Let's see here. Let's do times 75%. I'm trying to figure out how much he needs to pay it down. So he needs to, I was close. He needs to pay it down to 34,500 in order for him to it to start making effect, and this loan starts working for him. If he does that and he doesn't miss any payments, he pays down these loans, his credit utilization is under 30%, then he'll start seeing his credit start improving, but then he's gonna have to take care of these. He's gonna need to take care of these loans that went to collection. All these went to collection. At some point, he's gonna have to address it, because the payment history accounts for the loan being charged off. So your credit score already went down because the loan was sent to the collection. The credit score went down again because he missed payments. So the ones mean that they're 30 days past due, and then 2 and 3 is 60, 90. G means that it was sent to collection. And C's means that they were current and they didn't miss any payments. So again, it went to collection. He's not paying on time, and he owes money. That's a triple threat, not in a good way when it comes to building your credit. All that plays a factor on your credit score. So, making sure that he this doesn't ever happen again is going to be very vital. If he does this, this person will get in an 800 credit score. I'm going to tell you when. If nothing changed and he does exactly what I say, I would predict around 4 to 5 years he would be at an 800 credit score. Yeah, it's it's not going to be an overnight. When your credit's like this, unless it was fraud, that's one thing that someone opened this on his behalf. But if he did this because he just didn't want to pay anymore and he was tired of paying the bills like everyone is, which I get it. Yeah, this is not how to go if you're trying to take care of your credit. So yes, any questions, put them in the chat. I want to be able to answer them, so I can go ahead and help you. All right. Give me a moment. I'm going to put a poll in the chat. I want to see where your credit score is. And again, I'm not going to be able to know who answered these, so um, but tell me about things that that is going on with your credit, and engage there with that poll. I want you guys to be able to answer and then um, put your questions of what you're trying to accomplish with your credit. So that's essentially it for this part of the of how to get your credit to an 800. What we're going to do is now we're going to react to a video that's going to show you. I'm going to show you what these people, these credit gurus, these people that are not like me. So in case if you're new to my channel, I am what is known as a consumer loan underwriter / credit analyst. So pretty much it is my job to make a decision on a loan, whether I'm going to give it or not, or if I want to counter and give them a different amount. I also help people build and rebuild credit. I've been doing this for 10 years. So I have a great understanding of how to build your credit score and also how to get approved for loans. I am that guy. So you have a person in the inside. Take advantage of me. Because again, slowly as I get bigger, it will become difficult. And maybe the way to get a hold of me is going to have to be scheduling a one-on-one, which again, it's never a bad thing. But take advantage this moment now that you will be able to get this information for free. There's nothing that is going to be holding me back from giving you the answers of what you're looking for. So we're going to be comparing based off what we've seen here today. We're going to cross-reference it between the credit bureau to see if it lines up of the person that had the 800 credit score. So let's go ahead and get started on that. Oops. Not what I wanted. This is what I want. And put likes in the chat. We need to get this we need to get some engagement so we can go ahead and spread this. That's how the algorithm works. The more people like and the more the people that engage, the more that I'll push it out. So other people that are in your situation can get the credit help. Because again, there's just too many people out there that, like, it's very mixed. Like, there's people that understand the craft and truly want to help people, and people that just look at it as a side business and they're just trying to go through people and just collect the money. So, but I'm one of those that is the opposite. I actually want to help the community because there's such a huge disconnect in people still with credit, even though the information's out there. So I've definitely taken it upon myself of wanting to be able to help those people, and more that, my time is really available right now, because every Thursday I'll be doing this habits of 800 credit scores. So you guys, you're going to be seeing different types of credit reports in different videos. So it's not always going to be the same type of information or documents in videos you will see. They will be different. So definitely look to subscribing, and looking at the other content. I mostly engage in shorts, and then lives, and then I do long format videos, in case if you're wondering. But you guys got me today. So anyway, enough with the yapping, and let's get this video started. All right, so how to build a perfect credit score from scratch. Let's see.
There's a secret number that follows you throughout your entire adult life. It's not your social security number, and it's not your phone number. It's your credit score. And this 3-digit number has a massive impact on your financial future. A great score can save you thousands of dollars and open doors to your goals, while a bad score or no score at all can hold you back. But how do you build a great score, especially if you're starting from scratch? In this video, we're going to show you exactly how your score is calculated and the simple steps to build a perfect one. First, what is a credit score? Think of it as your financial report card. It's a grade that tells lenders how responsible you are with borrowed money. The score is calculated using 5 key factors. The most important factor, making up 35% of your score, is your payment history. This is simple. Do you pay your bills on time? Every single late payment can damage your score. The second most important factor, at 30%, is credit utilization. This sounds complicated, but it just means how much of your available credit you are currently using. If you have a credit card with a $1,000 limit and you have a $300 balance, your utilization is 30%. Keeping this number low is key. Next, at 15%, is the length of your credit history.
Okay, so he's off to a rough start. Or not rough start, a little minor. So the credit utilization, he's right on that. So the credit utilization does play a part, but it's not what it is. 30% is amount owed, which ends up coming down to how much debt you owe as a whole. So if you have like credit cards, auto loans, a house, student loans, all of that together, how much do you owe? Do you still owe 100% of those? The next is going to be individually. So then individually, on your car loan, let's see if you have a $30,000 car loan. How much do you still owe left? Did you just barely start? Are you halfway? Are you almost? Do you only have like 2 years before it's paid off? That plays a factor as amounts owed, because it's debt that you're slowly paying off. And then credit utilization, which is what gets a lot of people, which is what I think what he was going here, because there's a lot of people in debt with credit cards. So because of that, I can see why he said it, but it wasn't entirely correct. So to clear him up, it is 30%. And this is how we're going to validate this. Because again, I'm going to show you the algorithm. This is Experian. This is the most used credit score. As you can see, payment history, amounts owed, credit history, credit mix, new credit, whichever they want to do first. So this is what we should see in this video. Not this exact picture, but he should be explaining this plus additional information. Let's see if he does it.
A longer history of responsible borrowing is always better. Then at 10% is your credit mix. Lenders like to see that you can responsibly manage different types of credit, like a credit card and a small loan. And finally, at 10% is new credit. This tracks how often you apply for new credit. Applying for too many accounts in a short period of time can be a red flag. So, knowing all that, how do you build a score from zero? Here is a simple 3-step plan. Step 1. Become an authorized user. If you have a trusted family member with a good credit history, they can add you as an authorized user to their credit card. You don't even have to use the card. Their history of on-time payments will start reporting to your credit file, giving you an instant foundation. Step 2. Get a secured credit card. This is the best tool for building credit on your own. A secured card is a special credit card where you make a small security deposit, usually a few $100s. That deposit becomes your credit limit. You use it for small purchases, and after a few months of on-time payments, the bank will often upgrade you to a regular, unsecured card and return your deposit. And step 3, use it responsibly. Once you have that card, you must follow 2 simple rules. First, always pay your bill on time every single month. Second, keep your balance low. A great rule of thumb is to only use it for one small recurring purchase, like your Netflix subscription.
I'm so sorry, guys. I lost.
There's a secret number.
I lost the video altogether on my end. So bear with me. Let me play it again. Okay.
Often you apply for new credit. Applying for too many accounts in a short period of time can be a red flag. So, knowing all that, how do you build a score from zero? Here is a simple 3-step plan. Step 1. Become an authorized user. If you have a trusted family member with a good credit history, they can add you as an authorized user to their credit card. You don't even have to use the card. Their history of on-time payments will start reporting to your credit file, giving you an instant foundation. Step 2.
Okay, so here's the thing about the authorized user that a lot of people don't seem to understand with authorized users. So authorized user, whatever that person does with that card that you're an authorized user will affect you. So you have to pick the right person that is responsible financially and credit wise, unless this isn't gonna work. So so it's like you have to make sure you find the right people. And if you're doing this for your kids and you do not have great financial stability or financial decision making, then don't even add your kids because you're just going to make the situation worse for them. So that's what I would say about authorized user. It is a great step to go ahead and start. But so far that's what I wanted to at least let everyone know.
Get a secure
Hit the like button, baby.
credit card. This is the best tool for building credit on your own. A secured card is a special credit card where you make a small security deposit, usually a few $100s. That deposit becomes your credit limit. You use it for small purchases, and after a few months of on-time payments, the bank will often upgrade you to a regular, unsecured card and return your deposit. And step 3, use it
Okay, so with step 2, he's right, but let me give you alternative options. The secured credit card is the most easiest because you just need a couple $100 and you can just go open it. The next alternative I always like to do, and I always like to recommend people an auto loan, personally. um, pick something within your means. So when you go to get your car, minimum, minimum that I want you to put down is going to be 20% after all the all the final balance. So not the price of the car, but the fees, the sales tax. After all that, put down 20%, and it's going to go ahead and inflate it to 30 because most lenders will only use 20% based off the car. But if you're putting down 20% overall, it's going to look a lot better. So you want to shoot for 20 to 30%. You're maybe asking yourself, how do I do this? How do I figure this out? I got you. I'll show you how to do that. We're going to use a calculator. So, very simple to do. So, whatever number that you're looking for, let's say like the average car, we're just going to say it's, if it's brand new, if you're getting brand new is going to be 30,000. I would say pick something within 10,000. If you if you make under 50,000, stick to around 10,000, please. Oh my gosh, the less the better, because the economy out here is crazy wild. People are losing their jobs left and right, and a lot of people, like today at my job, I saw so many people wanting to consolidate loans, and they have like 20, 30, 70, $100,000 in just unsecured debt, and I just had to decline them because they're just too much into debt, and whatever I give them isn't gonna go ahead and help them. And what is it gonna stop them from filing bankruptcy? So it is really tough out here. So if you have to get loans, please get very small loans, not a really high amount. You don't want those credit problems. That's how your credit starts low. You just get yourself into a situation. So going back to this though. So let's just say 30,000. Let's just say 30,000 out the door for a new car. You're gonna enter the amount, how much you need to pay. You're gonna times that by 20%. You do 20 and then hit the percent sign and hit equal. That is going to be 6,000. So if you don't even have 20%, don't even step into don't even apply, don't even step into a dealership. That's a lie. Because, yes, step into a dealership instead of a credit union, because the dealership is most likely to get you somewhere. Because with the dealership, they have access to a lot of different lenders. Think of them like a broker from like when you get a house. Or if people don't know what a broker is, pretty much it's a person that has access to all these different type of lenders. With a dealership, they can help you with people that have bad credit, or that work with people that have no credit, limited credit, or bad credit. But the interest rate normally tends to be higher. So if you're going through a credit union or a bank and you show them that you're putting down 20%, I'm telling you that is going to make such a huge difference. I declined so many loans because people that have bad credit, no credit, they just don't want to put money down. They just want to borrow money and do that. And sometimes it doesn't work like that. That works for people that have a 700 and plus credit score. Oh yeah, like why do you need? We're not gonna require you to do it but for the people that are in this low, the people in the 600s, 500s, even 400 credit scores. Yeah, we're gonna need a down payment, because you know why? Because you need to be able to compensate. That's why. If you're just take and never give at all, why would someone give you a loan? Or even better, let's say if a friend of yours wanted to borrow money, but everyone has told you that he doesn't really pay people back, would you give him the loan? That is like the best way to see it, because the last thing you want to do is, do you want to lose that money that you worked so hard and you just lent it to somebody? So that is a issue that can go ahead and happen. So that's why you see it's so important to put down a down payment on it. It increases your chances of being approved. Someone like me to be like, you know what? He doesn't have any credit, but he's willing to put his money where his mouth is. Let's give him this loan, right? So that does play a factor. So if you're gonna step to want to not do a secured credit card and you want to jump and do an auto loan, this isn't just auto loans. If you want to get a motorcycle, obviously boats are a lot more expensive, but if you got the money, that's possible. If you want to buy an RV, putting 20 to 30% down out of the out the door price, I'm telling you, it is going to make a huge difference. So, so yes, again, put your questions in the chat. I'm gonna answer them towards the end. Let me know if the audio and the video is still great on your end. Put ones if it is. And yeah, so let's continue. We're almost done, Mr. Step 2. And then again, if you're going to get that secured credit card, it's just like a regular credit card. Make sure you don't exceed 30% at least. 10% for it to be the best. For your credit score to be at the highest that it can be.
Responsibly. Once you have that card, you must follow 2 simple rules. First, always pay your bill on time every single month. Second, keep your balance low. A great rule of thumb is to only use it for one small recurring purchase, like your Netflix subscription. Pay it off in full each month. This proves you are responsible without getting you into debt. Building a great credit score isn't about borrowing a lot of money. It's about proving you can be trusted with a little. If you found this guide helpful, subscribe to Future Proof Finance for more essential guides to mastering your finance.
All right, what did you guys think about that video? Put it in the chat. I honestly really didn't think it was the best. That's something that you see with a lot of people that like to show, how to get an 850 credit score. It's what they all say. They all say the same thing. When it comes, he didn't say anything. He didn't get into the nitty gritty of what makes a 800 credit score. As you saw here in my live, I was able to go ahead and do that. I broke down why this person was at an 800 credit score and what you can do to get yourself in that same situation. I broke down someone that had bad credit. I showed you the credit algorithm, which is pretty much the cheat code. So take a screenshot of this if you're on your mobile phone, or just Google Experian payment history until you find this. So yes, so that video it's a very basic video. It's not gonna get you to 800 per se. Yeah, I don't think so, because he didn't touch a little bit more of it. What he was missing is going over credit history, how having a long credit history will help you build. I would say anything, once you go into the 4 to 5 years of having a loan open, you're going to start benefiting nicely with it. I've seen people not have their credit mix and only have credit cards, and they've gotten into the high 700, but not the 800, because they're missing an installment loan. They're missing like an auto loan on their credit, a mortgage, etc. So, so that is something that he was just missing. He was just missing a lot of details to go into it. But yeah, that is pretty much it for this live here today. I'll wait a couple more minutes. Make sure see if there's any chats that come in, any questions. But while we wait for that, let's react to another loan. Let's react to another video while I wait for you guys to put any questions in the chat. Alright, let's see if I find someone that talks about perfect. Alright, guarantee you I'm going to run into the same thing as that same video. Okay, let's take a look at this person.
Most people never 850 credit score, but if you follow this blueprint, you could be one of the few.
All right.
Almost nobody knows this, but there's a hidden formula that the credit bureau uses to decide who gets that mythical, untouchable 850 credit score. And here's the shocking part. It's not about being rich, it's not about paying all your debt, and it's definitely not about never using credit. By the end of this video, you'll know the exact steps in the exact order that the banks and lenders reward with a perfect credit score. Now stick with me.
He said lenders. I'm part of that squad group right there. Let's see. I'm a cosign. Let me see if I cosign some of what he says.
Because if you even miss one of these steps, you can kiss that 850 credit score goodbye. But before we jump into this, make sure to drop the word 850 in the comments if you're chasing perfection. Now, there are going to be 7 very important steps in this video that you do not want to miss, so let's jump in. Now, step number 1, the number one myth that's killing your credit dreams. Now, most people think that an 850 means 0 debt, and that in fact is wrong, because having no accounts or no balances makes you invisible to the credit system. Now, the formula actually requires you use credit, but the right way. Credit scoring is all about showing you can manage credit, not avoid it. So if paying everything off isn't the secret, what is? Let's talk about utilization. Now, step number 2, the magic number for utilization. Now, you've heard me talk about this before. I personally, you can manage credit, not avoid it. So if paying everything off isn't the secret, what is? Number 1 myth that's killing your credit dreams. Now, most people think that an 850 means 0 debt, and that in fact is wrong, because having no accounts or no balances makes you invisible to the credit system. Now, the formula actually requires you use credit, but the right way. Credit scoring is all about showing you can manage credit, not avoid it. So if paying everything off isn't the secret, what is? Let's talk about utilization. Now, step number 2, the magic number for utilization. Now, you've heard me talk about this before. I personally like to carry 0% utilization because I don't want to owe anybody any money. It's just that simple, and I don't like to pay interest. But the fact remains, the sweet spot is not 0. It's around 1 to 7% utilization on revolving credit. Now, what is revolving credit? That's credit cards and solely credit cards. Nothing else matters in utilization except for...
Yeah, no. I was like, you have your store credit cards, you have your gasoline credit cards, you have your home equity, you have your lines of credits. So far we're off to not the best start. So yes. So all right, well, that is all the time that I have for today. I saw that there weren't any chats that came in. So I will see you guys next time. If you're new to my channel, thank you for going. Hopefully I get your questions next time, and look forward to subscribing.